What if you could buy tomorrow's 10-bagger for less than the price of a cup of coffee? History has shown that companies like AMD, Monster Beverage, Ford, and SiriusXM all traded below $1 before delivering extraordinary returns. Now let's be clear, most penny stocks fail. According to academic studies, the majority of penny stocks underperform the broader market over time, making risk management essential. That's why today's list isn't just a collection of random stocks under $1. I screened for companies with real businesses, multi-million-dollar market caps, industry catalysts, institutional interest, growing addressable markets. And at the end of this video, I'll reveal my top 3 picks that I believe have the best risk-to-reward potential over the next 5 to 10 years. Let's get started. Screening methodology. Before we jump in, here's exactly how these stocks were selected. Trading under 1. Listed on major exchanges, strong sector tailwinds, upcoming business catalysts. Enough liquidity for retail investors. Because buying a stock simply because it's cheap is one of the fastest ways to lose money. Instead, we're looking for companies where the business has a chance to grow faster than the current valuation suggests. Stock 9. Franklin Street Properties, FSP. Current price, $0.48 million. Sector, commercial real estate. Why it made the list. Although commercial real estate has struggled because of higher interest rates, office valuations have fallen dramatically. If interest rates continue declining over the next several years, companies owning quality office assets could benefit. Big risk. Office vacancies remain elevated. Stock 8. Beyond Meat, BYMD. Current price, $0.55. Sector, consumer food. Revenue has declined, margins have compressed, but the company still owns one of the strongest brands in plant-based food. If management successfully restructures operations, the upside could be significant. Risk, execution. Stock 7, Chai ETF Series Trust, CAI. Current price, $0.47. This is one of the more speculative names on today's list. High volatility, high trading volume. Suitable only for investors who understand the risks. Stock 6, Lotus Technology, LOT. Current price, $0.877. Sector, luxury electric vehicles. Catalysts, EV expansion, global luxury market, technology integration. Risks, highly competitive EV market. Stock 5, Nauticus Robotics, KITT. Current price, 0.87 cents. One of my favorite sectors, robotics. The global robotics market is projected to expand substantially over the coming decade, and underwater robotics is a niche with long-term demand from offshore energy, defense, and infrastructure inspection. If Nauticus executes successfully, this could become a major growth story. Risk, early-stage company with execution challenges. Stock 4, One Mednet, ONMD. Current price, $0.71. Sector, healthcare AI. Healthcare data is becoming increasingly valuable. Hospitals are investing heavily in AI-enabled workflows. Drug companies need high-quality clinical datasets, and AI models require enormous volumes of medical information. If One Mednet expands partnerships, revenue growth could accelerate. Stock 3, Canopy Growth, CGC. Current price, $0.93. Cannabis remains one of the most controversial sectors, yet legalization discussions continue across multiple jurisdictions. If regulations improve, companies like Canopy could experience significant investor interest again. Risk, cash burn, competition, dilution. Stock 2, Gossamer Bio, GOS. Current price, $0.20. Sector, biotechnology. Biotech is one of the highest risk, highest reward sectors. One successful clinical trial, or FDA milestone, can completely change a company's valuation. Of course, the opposite is also true. Never invest in biotech without understanding the pipeline. Stock 1, SES AI, SES, current price $0.5. Sector, AI battery technology. This company is developing next-generation battery technology. Why is that important? Because electric vehicles, energy storage, and AI data centers all require better batteries. If commercial adoption increases, this industry could become enormous. Major catalyst, strategic partnerships with automotive companies. The biggest opportunity. Instead of chasing the cheapest stock, look for the biggest future industry. Today, those include artificial intelligence, robotics, healthcare AI, advanced batteries, defense technology. Money follows innovation. That's where institutional investors are focusing. My top 3 picks, final verdict. After reviewing all 9 stocks, these are my personal favorites based on long-term industry trends rather than simply the lowest share price. Number 3, Gossamer Bio, GOS. Why? High-risk biotech with asymmetric upside if clinical milestones are successful. Number 2, Nauticus Robotics, KITC. The robotics market continues expanding. If the company secures additional commercial contracts and improves execution, the upside could be meaningful. Number 1, SES AI, SES. This is my favorite. Why? Because it sits at the intersection of 2 of the biggest investment themes over the next decade: artificial intelligence, next-generation batteries. If the technology reaches commercial scale, the market opportunity is significantly larger than the company's current size. Final thoughts. Remember, a stock trading below $1 doesn't automatically mean it's undervalued. Sometimes it's cheap for a reason. Focus on revenue growth, cash runway, industry tailwinds, management execution, balance sheet strength. Those factors matter far more than the share price alone. If you enjoyed this video, like the video, subscribe to Stock Market Analyst, turn on notifications so you never miss the next hidden investment opportunity. And let me know in the comments, which penny stock under $1 do you think has the highest chance of becoming a future 10-bagger? Thanks for watching Stock Market Analyst. Stay informed, invest wisely, keep growing.